So in my last video from yesterday, we briefed on how a lot of stocks had been dipping for a couple of days, and now today, that trend of dipping has mostly continued. However, the AMD and Chewy stocks that I most recently mentioned and took a new position in have actually been holding pretty stable, and that actually relates to what I'm most interested in. While a lot of people are worried about a new crash, I would first have to see all these stocks drop below the support level that they've had established for a few weeks, which they've not done yet. And even if they did, they would have to get back to their bottom from like a month and a half ago and below that before I would start to say, okay, it's time to lay off the market for a while. Sort of like how a lot of people think next year is when we'll have a nice bull market. And while that's probably true, the market does like to time things in early, so there could even be some of it being priced in early, rather, this year, and there's still a lot of time left this year for some good news, or some stock-specific good news, like earnings reports or other catalysts. And especially, as I mentioned, when there's high-conviction stocks like AMD that's obviously undervalued at $100, then even if you don't get the short-term trade out of it you expected, worst case scenario, you're just going to have to hold it for longer until it's eventually, inevitably, a way higher value anyway. And there's a lot of other great stocks like that, some of which have been rallying pretty consistently or holding a good support level, like Beyond Meats is a good example of that. And then at the $30, $40 range, it's been a great buy, and then it's been rallying to about $50 or $60 every time, and it used to be way higher value. Pinterest is another great example I've mentioned before of a profitable corporation that's extremely undervalued at $20-something when it'll probably be back to 40 to 60 later this year or next year. Now for some shorter term opportunities, I've mentioned AVCT in a previous video, calling it a cash cow because there was 3 times I bought it in the 70, 80, 90 cent range and then sold it at $1 plus, which is only 10 to 30% with shares. Both options, that's 50 to 100% for the return. So when it got back down to about 91 cents today, I figured it was a good buying price. And of course, reserving some capital in case it were to dip further so that you could buy more would also be a good idea. And it's already kind of started to cut back around a little bit. One other interesting thing that happened today of 2 sort of news-related current event topics is Rite-Aid took a sharp drop from about $8 to $6, apparently from a negative analyst review. It's been taking a beating for quite a while. The earnings are negative on it, so I guess they must be struggling. I'm not really sure what they're going to do from here. Just because the stock is going down or up doesn't mean it's going to keep going or that it's going to turn the other way. However, at 620, I did buy a 650 call that I plan to sell if it gets back to 7 or 750, so that'll probably be sellable today or tomorrow, which is nice. The only other thing I can think of related to current events is with the new US and European sanctions on Russia and the war continuing, oil prices are going back up. But what I like to do with that, I may have mentioned a long time ago, is to trade the short side. An SCO is a great bear fund for oil. When oil goes down, SCO goes up. And it likes to have these $5 dips followed by $6 to $7 rallies. So anytime it's in the 5 range, it's a pretty good buy to sell at 6 or 7. Plus, eventually, when things cool off, it should be a lot higher. You just can't hold leverage funds for a long-term period, but in general, it has a lot of potential. With that said, this is Karsten versus the market here, and that's it for today. Have a good one.